Hey all, welcome to ShareTreck. This is Raj here, friends. I hope you guys are all doing well and are all geared up for this week, a very important week. I want to start off with my market overview. I think the US stock indices, as you can see out here, they are higher pre-market. And this is all the effect of the EU US trade deal framework, which got approved. So that's what is happening. Global markets are rallying. Europe's major indices, DAX, CAC 40, FTSE 100, are up 0.3%, 0.8%, boosted by historic US-EU trade agreement, which was announced in Scotland over the weekend. Asia Pacific markets were mostly positive, with gains in Hong Kong and South Korea, while Japan's Nikkei lagged due to uncertainty around its recent trade deal. Now, friends, if you recollect, I had mentioned in my earlier video that even though Trump has announced Japan has a trade deal and all that stuff, the Japanese newspapers are saying it's just a framework. Nothing has been agreed. So we have to watch this space. And I think EU-US is also a trade framework. It's not a trade agreement, but we'll have to wait for a little bit of clarity. To the best of my knowledge, I think there is no trade agreement signed so far. We'll talk more about that in a separate video. They are all frameworks. So August 1st is approaching very quickly. We'll see what happens out there. But please be careful in the market. That's my personal opinion. And that's the way I'm conducting myself. In terms of major headlines, I think the 15% tariff on most European exports to US seems to be the major driver today. And the agreement includes a commitment for the EU to purchase 750 billion in US energy and 600 billion and to invest around 600 billion in the US, providing relief for exporters and bolstering US energy and tech sectors. Now, all these agreements are signed. How you follow through is a big question, right? So it's something that remains to be seen. Because many of the agreements are not win-win agreement, it's a win-lose agreement where the US wins and others lose. So those agreements could be signed for, they are all frameworks. They have been signed as intention to go forward in order to avoid the higher tariffs. Tariffs will remain, but I don't think the deals are going to be signed off. We'll wait and see what happens, but this is the drama that is being watched by the market, and that's what is affecting all the positiveness that are coming into the market. The reality is that there's an indirect tax on the consumer, which is reducing their purchasing power, which is creating inflation. And those effects will be felt after the excitement of all these victories of signing these deal frameworks are over. And that's when the market, which are already stretched and highly evaluated, can start coming down. And the Federal Reserve starts a two-day policy meeting today, while rates are expected to remain at 4.25% to 4.5%. The traders are watching closely for any forward guidance on a possible rate cut in September. I think that rate cut is already priced in, but confirmation would be helpful. And this week is going to be packed with a lot of economic data. Tuesday, we're going to get US JOLTS opening or job opening data. And on Wednesday, we're going to get ADP private payrolls, and also a Fed decision. And PCE index is coming in on Thursday for inflation. And on Friday, we have July jobs report. All of these things are most likely to move the market. And markets are at an elevated level, as I mentioned before. And the earnings season is heating up. Over 150 S&P 500 companies report earnings this week. And for us, the attention is most focused on Meta, Microsoft, which report on Wednesday, Amazon, Apple, which report on Thursday. Investors are especially attentive to AI spending commentary and forward guidance from tech companies, as tech and AI-related stocks have driven much of the recent rally. I think that all these companies will have to start monetizing LLMs and AI in such a manner that they don't have a pressure to control their AI infrastructure spending because they're showing returns. Otherwise, there will be a drop in the earnings, and there will be a lot of front loading of expenses, capital expenses, and that could then hit the sentiment for NVDA. So it's all a stack of cards, and we are at a precarious status. So we just have to be very careful this week. Economists are warning that the S&P 500 are highly concentrated in a small group of tech stocks, and they're drawing parallels to the late 90s dot-com bubbles, and some strategists are advising caution, highlighting volatility risks as the market awaits macro and earnings development. And of course, the August 1st deadline is also coming for tariffs. All of these factors are converging together, and we are at elevated levels, and we've got the bearish divergence in place. So be careful. And sector and global highlights are that energy stocks are in focus after trade deal boosted crude prices. Brent crude trades up at $69 per barrel, and Samsung Electronics had a jump of 6% in valuation in Asia after inking a 16.5 billion chip deal with Tesla, highlighting ongoing semiconductor momentum. Retail shares fell 8.5% post earnings last week, following a quarterly loss and news of job cuts. And I personally think that you could see a dead cat bounce in Intel either today or tomorrow. That is a very small period of gain, a little bit of money to be made. One has to be alert out there. And then we have the macro and sector outlook. Market optimism is high due to easing trade tensions and robust tech earnings, but volatility risk is elevated ahead of the Fed and inflation data, the earnings data, and the August 1st deadline. And also AI chip makers and tech mega caps remain core market drivers, but many analysts caution against overexposure because they can turn on a dime. So now I'm going to talk about just select stocks, and then I will take your feedback and see what you guys have to say. In the chat session, Hot Dog is here. Hi, Hot Dog. Thanks for joining. And yeah, I'm going to focus on just a few stocks. I'll go to the first order of business is make a single window, get into a 1 day time frame. Okay, so here we are with the S&P 500 futures, and we are breaking above this diagonal line of resistance. We are already at 6,435.25, up 0.16% in pre-market trades. This is really positive. This converts our diagonal line of resistance into a diagonal line of support. And if we confirm this line of support by staying above this and opening above this tomorrow, I think then we are looking at going towards our target of 6,666.50. Next, we look at NASDAQ. Oh, before I go, I would like to point out that our bearish divergence still persists. Even if I reduce the size of this and take it to more recent time frame, we still have bearish divergence happening out there, which is something we should not ignore. NASDAQ also is under this diagonal line of resistance. It has got a target, in my opinion, of around 25,951. But the breakthrough it has is that it is still above our earlier resistance of 23,426, which now becomes a support. We are opening above this level, and if we close above this level today, then we would have confirmed this support, and this can become the basis for us to go up further. So today the support is 23,421 and the resistance is 23,792. We still have the bearish divergence out here. I'm going to reduce the time frame out here to show you that we still have the bearish divergence. So this is something that we can't forget, and you can see that the bullish sentiment is also waning. So we are in kind of Goldilocks situation. Dollar index is going up, and we also have the 10-year yields, which are up 0.18% in pre-market session and 0.18% for the 20-year yield and for the 30-year yield. All of them are slightly up, and they are likely to move upwards. And I'm also looking at the index. Let's go on to the indicator. S&P 500 index has got very good support out here for today at around 4,345. And NASDAQ has got a support, which is going to be at around 22,645 today. It has a resistance out here at 23,264.83. But by the looks of it, we are going to open above this. And therefore, our resistance is going to be at 23,512.58. So that's the range of movement. And again, we have the bearish divergence still going on. VIX is up 1.94%, but I'm just going to convert this into a resistance at 15.88. Gold is up 0.02% despite the dollar index being strong. So that is showing a little bit of inherent strength in gold. I would like to buy a little bit of gold. I tried last time, but I couldn't get it at the price at which I wanted. I wanted to be very close to this line of support, somewhere around 3,320. So today I'm going to try and buy a little bit of gold on the Canadian side. And we have Dow Jones, which is up 0.07%. The chart is looking pretty strong out there. But again, you have a bearish divergence coming in. And then QQQ is up 0.38%, showing very strong market action in the pre-market. And our support today is 565.97. We are creating new highs while still having the bearish divergence persist. So something has to give somewhere. You can see the bullish sentiment of the market is also waning quite a bit. And we'll watch the volumes. We can see that the volumes are also decreasing. A lower volume means that there is less conviction in the market. Put call ratio is between bullish to mildly neutral to mildly bullish. It has been in the same status for almost the last whole week that we have been watching it. Now, I want to talk about just 3 or 4 shares. And those shares are NVDA. So NVDA, everything is riding on NVDA. We have a topping tail which has not been cleared off so far. Topping tails generally precede a downturn. So we'll have to see if today we can break the topping tail. So that is the first important thing I want to say about NVIDIA. The second thing is that NVIDIA will have a support today at 172.97. And the third aspect is that in this week, as Microsoft and others start reporting, if they reduce their outlay for infrastructure development, then that's going to have an impact on NVIDIA, because these are all forward P's that we are looking at, which is driving the market pricing. So if any of these companies come and say that they are going to reduce their spending on data centers and they're going to reduce their spending on infrastructure, things like that, then that could be a problem. Then the question becomes, why would they say such things? The reason why they may say such things is because their earnings are coming from contemporary products and services where they're leading the market segments, and they're using those profits to plow money into the future opportunity, which is in AI. And they're starting to monetize AI in different ways. LLMs are being monetized, and the monetization of these products has got to add to the margins. If they do not, then the EPS will suffer. And in order to prevent the EPS from suffering, these companies might decide that they may go a little bit slow on infrastructure investment. And any indication of that is enough to push the price of NVIDIA down. It is pretty elevated. So it could come down, have a dead cat bounce, and then go somewhere to stabilize. And if that happens, all the Mag 7 will start going down. So that's the risk out here, in my opinion. That's why I wanted to talk about NVIDIA. And with regard to Palantir, I think that it's coming very close to our target of 161.08. And today, it has taken out this topping tail, which was present yesterday. It's already taken out in the pre-market session. It's up 1.45%. It's at 161.11. So once we meet this target, I don't know how we'll go ahead. I would have to draw a new target out here. And this is the new bull flag. And if we take the breakthrough point out here, then I think a new target for Palantir is 175.77. And I don't think any bad news for NVIDIA or reduction in infrastructure cost is going to impact Palantir, because Palantir is in the second wave or third wave of AI. No, they're already making applications and they are capitalizing on those applications and making money. So I think Palantir seems to be a much safer bet in this kind of environment. So that said, the third stock I want to talk about is Intel. Intel has had a gap down, and right now we are seeing a doji candle from the day before. And I'm thinking that we are due for a little bit of dead cat bounce out here. If one was to enter into Intel at this stage, they have to be very careful and get out with whatever marginal profits they get, and not stay for too long, because I think the company is likely to go down over a period of time. It's just a slow drip, drip, drip. I think AMD has already captured the PC market. That's also another reason why this drop has happened. So that's my 2 cents on the stocks. And if I look at genomics, I don't have much to talk about in terms of genomics, because if the markets turn around, genomics will all fall together. Because right now, what is happening is the Max 7 has already given all the returns possible, and people have taken most of their profits out there. Many are sitting on those profits, and those people who are sitting on those profits, they are thinking, I don't want to lose everything. Let me take part of the profits and move to places which are undervalued. And one of the most undervalued area is the genomics area. And the risk premium is very high. So people are putting money now here, but taking money out of the Max 7. They're thinking, okay, instead of just losing the money if the market turns, I might as well take that money and put it with genomics, because in future I may make profits out there. So I take a little bit of my profit and put it out there. So that's how I think the genomics stock prices are going up. And if the market starts coming down, I think genomics will fall very fast. And we have seen that happen in the past. So I want you guys to be very careful with genomics. That's the way I'm looking at it. One shining star out here seems to be Illumina, which is continuing to move up. And Illumina has got a cup and handle pattern here, in my opinion. And if I draw the cup and handle pattern, that gives me a much bigger target. So let me take the target from here to the neckline. And from the neckline, I would say I would put an intermediate target of 136.34 for Illumina, which means we have around $27 to make on Illumina. And then a base of $109, that's a whole lot of percentage points of increase. So that would be a company in which I would like to enter, because we have a bull flag forming out here. This is the second level of support that you can see. If you just look at this bull flag and take it from the breakout point, then you have at least 111.58. So $2 at least is, more or less confirmed. So that's the way I'm looking at it. So yeah, so that's all I got, my friends. If you have any questions or any comments or any ideas, please share it in the comment section. So let us see what is happening in the comment section, in the chat section. Let's look at who all are chatting. I'd like to go in and check out. Give me 1 second while I move across to the chat window. And we have a lot of hot dog is saying, a lot of things to digest this week for sure. Yeah, it's a confluence of whole lot of stuff. Inf is saying hi. Most important stock in the world, NVDA. Yes, I agree. And then how is Tesla doing? Okay, let's have a quick look at Tesla for Inf. I'm getting into AI, back into AI. I'm looking into Tesla. The Tesla share is still looking bearish to me. The sentiment is bearish. MACD is bearish. Momentum is just at average. And pre-market, we are up 1.52%. And it says that this increase in 1.52% is following President Trump's trade deal with EU, which sets a 15% tariff on European automotive goods. These are all forward-looking statements. I think I would look at the midterms coming in. The GOP is not in a great state. They're trying to super gerrymander so that they can maintain the House and the Senate. And if that doesn't happen, then Trump would become a lame duck president. And many of these policies may change or get diluted, because once you start taking tariffs, it's addictive. You cannot get away from the tariffs. So the way the tariffs fall, and the ones that get implemented, they will stay, but no new tariffs will come in. And also there'll be an attempt to mend the relationship with the world post-Trump. So all those things come into the focus with every passing day. And August 1st is around the corner. Are we going to have a taco, or are we going to crystallize a fixed tariff for everybody else who has not done a deal? Canada has not done a deal with the US, and a lot of automotive parts are moving between Canada and the US. So we still have not got an agreement. And the calculus in the Canadian side is probably that we have NAFTA negotiations coming up. We can expand NAFTA, include more products into it, and that then get into some kind of an agreement. And right now, all the products which are under the NAFTA agreement are still protected from the tariff. So overall, I'm thinking that tariffs are not yet baked, and Trump will create an illusion, the GOP will create an illusion that it's a big success and all the tariffs are in place and other countries have agreed to invest billions of dollars into US and accept huge tariffs on their products and give free entry for American products into their country. But if you really think seriously about it, these are all positioning. And when it comes to the brass tacks, companies are not going to want to lose their margins, and people are not going to want to let their purchasing power go down. So that's what I am keeping my focus on. And I would like to hear from you guys what you are thinking. Inf is saying nice semiconductors deal with Tesla supply for some company to Samsung. Hot Dog is saying, I guess those Samsung chips are going to pay a tariff. I think so too, Hot Dog. That's a very interesting point. See, the way Trump has done this whole thing is that he has made various statements at a whole lot of different points of time. So nobody really knows what supersedes and what precedes what exactly is going to happen. And I can imagine the confusion for these consultants or companies which handle all the shipping and taxes and all. They are called forwarding agents or clearing agents. Those guys, and also the people at the customs who are supposed to put these tariffs. I don't know how many of them know very clearly what exactly they are dealing with. So it's all to be seen, my friend. This is all it's a cowboy territory, shoot first and talk later and things like that. So I don't know what precedes and what succeeds these chip deals. Maybe they attract tariffs. So Hot Dog, you have a point out there. So when all of these things start coming out, the markets will become very volatile. Hot Dog is saying, I think Amazon earnings is going to be a huge indicator. Yeah, I agree. A lot of Chinese products are on Amazon, and Amazon sellers have increased their prices. And Jeff Bezos then went, after that news came in, Jeff Bezos went and met Trump in the White House. I'm pretty sure he must have been pressured to reduce the prices. So he may come up, Bezos may come up with some kind of a policy which might try to retain his merchants and at the same time retain the market share. So probably Amazon merchants are going to get some kind of a discount, which would then mean that EPS for Amazon might feel a little bit of a strain. But then Amazon is a diversified basket. It has got cloud revenue, it has got AI revenue coming in, it has got some leverage with AI. And they're also cannibalizing, in my opinion, based on whatever I've read, they're cannibalizing the most popular products on Amazon by coming up with Amazon Basics version of those products. So Amazon will survive. Jeff Bezos will find a way to move around all these things. So Hot Dog, you're right. The fact that Amazon will report and they will give us some kind of indication that could move the markets as well. So we have a whole lot of things, as you said, Hot Dog. We have economic data coming up, which is very meaningful, inflation data, jobs data, and we've got earnings coming up from the big drivers of Mag 5, which are pushing the entire indices up. Anything that happens with them can change the market. So I've been patient so far with my shorts on S&P 500, on the Mag 7, and I'm going to persist with that. I'm not adding anything more. At the most, I'm at buy gold. I have the profits that I've already booked. So whenever the market turns around, that's when I think I'll try to dollar cost average my shorts and take my money out from there and retain my profits. That's my game plan for this year. For next year, I'm not going to be into this leverage products. That's my lesson. So yes, wait and see is what I'm planning to do. So friends, that brings me to an end of today's session. And guys, I hope you liked all my other videos that I sent recently. And I would like to get your feedback from there. I think Hot Dog has commented, Inf has commented. I'm trying to improve the quality of those videos. I'm going to become more topical. We'll talk about companies and we'll talk about events. And I think that's what our audience likes the most. And as far as my technical analysis is concerned, I've always said that I'm just a regular retail investor, and I'm trying to share what I do with you guys so that I can get some feedback from you. So thank you very much for your support, Hot Dog, and thanks, Hot Dog. I'm improving myself. My lighting has improved. My voice is also improving much more on the video. I'm getting all of those things right. I'm working on my thumbnails. I've also got shorts going on. So yeah, more good things to come. And with your feedback, this channel can only become much better. So friends, have a great day in the market, make a lot of money. I'm going to do some more on crypto, Ripple especially. I've already invested on Ripple during the weekend. I'm looking forward to Ripple going further ahead. The case out there is that they've already worked on foreign exchange transfers. So the SWIFT and other things might get a bit diluted, and Ripple may take a share from there. That's the business case out there. And also some gold miners have used Ripple for some contracts. So it seems that Ripple may have a lot of business case to supplement the fact that it's a crypto. So that's exciting me a lot. And also it's a very cheap coin compared to Bitcoin. So that's where I'm going with it. And we'll see. Bye for now, my friends. I'll go have my breakfast, come back and start my work for the day. See you later. Thanks for joining.